Markets at or near record highs, and our guest says a bull case for a 7,000 S&P 500 is becoming more of a reality. We're joined by Brian Belski, Chief Investment Strategist at BMO Capital Markets. Brian, great to see you. Just update us now, where do you see the S&P 500 ending the year?
First of all, good morning, Canada. Good morning, Andrew. We appreciate it. In November of 2024, we published our market outlook for both the U.S. and Canada. We call it our year ahead piece. I think I've written, I don't know, like 26 or 27 of these in my career, and 14 of them at BMO. We think the secular bull market in U.S. stocks remains very much in place. Our 6,700 target that we put in place in November, obviously, we're almost there. We also published a 7,000 bull case for the market in terms of the S&P 500, which for all intents and purposes, we're headed there from our view. Earnings have been a little bit stronger than we thought, which was our case to remain bullish all along, by the way. And we think earnings going forward actually are going to become even more cyclically biased, especially considering that the Fed is clearly in quote unquote interest rate cut mode. So we do think that the bull market lives on. Remember, we've been on this bull case in the bull market since 2010 when we published it for the very first time. So this 25-year secular bull market, in our view, remains very much in place.
The TSX, though, has now gone above your base case. Is that right, Brian?
It has. Under promise and over deliver, Andrew. That's been kind of our view with respect to Canadian stocks since we came to BMO 13 and a half years ago. Our bull case for Canada has always been, as America goes, so goes Canada. We turned very bullish Canada kind of mid-2024. And we did say that Canada was going to outperform. If you look at Canada's on a local currency basis performance versus the U.S., it has outperformed this year. We do think from now until year end on a relative basis, it will at least keep pace with the market in the U.S., but underperform slightly given the fact that the U.S. market's much more diversified. But Canada, we think, is headed well over 30,000. We do think the earnings side of things, especially from the cyclicality standpoint, has really worked. And we do think that the negative bias with respect to rhetoric in Canada has really swayed things to the positive side in terms of earnings beginning to accelerate to the upside.
You have some stocks for us. Start off with Royal Bank. That would be a lot of people pick JP Morgan automatically in US banking. Does the same kind of go for Canada?
Great viewpoint. You know, we look at Canada and the U.S. in kind of different ways. So U.S., obviously, there are 600 publicly traded banks and 4,000 banks overall. JP Morgan is the creme de la creme in our view from the money center bank side. And I think RBC is to Canada what JP Morgan is to the U.S. RBC is the best in brand in our view. We've owned it for over 13 years. If you take a look at recent upside in terms of their earnings, it's been the capital markets in the wealth business. Capital markets clearly because of the volatility. In the wealth markets, the wealth side of things in terms of RBC, in terms of their overall longer term vision for wealth and what they've done both from the asset management side and the private wealth side.
Couche-Tard, some people had concerns about that possible massive Japanese acquisition would have involved taking on a lot of debt. That seems to be history for now. You like the look of Couche-Tard?
We do. The stock is down 7% year to date. It's trading at 19 times. You got double-digit earnings. The most recent earnings release, they beat to the upside. I think the problem with Couche-Tard is that the scarcity side of things in Canada, there's not a lot of other consumer stocks. We've been overweight Couche-Tard for a long time. We think that Couche-Tard is the best in brand in terms of what it does. In its acquisition strategy, I think people are too worried about that. If you take a look at where margins are, the gross margin analysis of Couche-Tard in the United States has been very strong. So they're still making money from the percentage basis in terms of their margin side in the U.S., greater than many other convenience stores in the U.S., and that's why we really like the stock longer term.
You've got a beverage idea for us, Celsius.
We do. So in the United States, for our great clients at BMO, both in Canada and the United States, we run a small mid-cap portfolio. And Celsius is a company that we've owned for about a year and a half. And Celsius also is one of those relatively, and I mean relatively healthy energy drink side of things. Pepsi recently increased its stake. We really like that stuff.
I like the way you say relatively. Yeah. I guess there's a big case for just drinking water. We won't get into nutrition though here. MongoDB, remind us what they do, Brian, and tell us what the attraction is here.
So MongoDB is part of what we like to call this AI pipeline, this AI infrastructure side of things. Obviously, you have the semiconductor side of AI, you have the thematic side of AI, but then you also have the software/data storage. This is a big data storage company. It's more of a mid-cap company. It really is, in terms of data centers, and way ahead of, let's say, some of the other ones. So I would put it along like a smaller version of Amazon or Microsoft or even Oracle, but it's a name we think that has a lot of momentum from a fundamental side, not just technical side in terms of price performance, but fundamental. We think that earnings growth is going to be doubling over the next 2 to 3 years.
Brian, we better jump. Thank you so much.
Thanks so much for having us.
Brian Belski, Chief Investment Strategist at BMO Capital Markets.